Michael Burry's hedge fund, Scion Asset Management, just disclosed their holdings and moves heading into Q4. Here's a summary of all of the biggest insights from their latest disclosure. Last quarter, Dr. Michael Burry's notable short positions in the S&P 500 and Nasdaq's QQQ were closed at a loss. The portfolio witnessed significant churn. By September's end, only 8 of the previous quarter's 42 holdings remained. Adjustments included downsizing stakes in Crescent Energy Company and The Real, while increasing investments in Euronav, Nexstar Media Group and others. This quarter, Burry opened 4 new positions, continuing his pattern of actively trading select stocks each quarter. Burry increased his stake in Stellantis NV, the 8th largest automaker, adding 75,000 shares to the existing 325,000. Despite a major UAW strike, the company's stock rose 16% since Q2, suggesting Burry's optimism in its further growth. This position is now Scion's largest, valued at about $8.1 million. Scion's investment in Nexstar, a TV media group with brands like NewsNation and the CW Network, grew over 200%, with Burry purchasing 33,651 shares this quarter. Despite a year-to-date decline of 15%, Burry's increased stake indicates confidence in its potential recovery. Burry's 35% increase in Star Bulk Carriers reflects a strong conviction in this Greek shipping company, now the 3rd largest holding in his fund. Burry expanded his stake in Euronav NV, a crude oil transporter, making it the 8th largest holding in his portfolio. They have returned about 11–12% YTD. Burry first opened this position in Q2 when shares traded between $14 and $18, and they've continued to trade in the same range since. His fund now owns 250,000 shares of the oil transporter, making it the 8th largest holding. Burry opened a significant but undisclosed short position against SOXX, a BlackRock ETF with major chip makers, amidst industry growth and geopolitical tensions. The sector's 50% YTD increase and strong Q3 earnings highlight the high-risk nature of this position. SOXX traded as high as $535 and as low as $460 in Q3 when Burry was purchasing put contracts. Today, it trades around $510. Burry bought 125,000 shares of JD and 50,000 of Barber, despite JD's 50% YTD loss. Their volatile trading patterns and recent stock price movements show a strategic play on market fluctuations. Today, the stock trades at $28.29 per share. The 2 stocks again moved to the top of the fund's holdings with JD and Barber, now the 7th and 5th spots in terms of percent of AUM. JD released earnings on November 15th, just a day after Burry's filing, and shares jumped close to 10% in opening trading. In line with its peer, Barber also gapped up around 5% at open. Burry bought 1,500 shares of booking holdings while also shorting it, possibly indicating a covered put strategy. This complex position underscores a nuanced approach to the travel services firm. Almost all positions that were reduced by Scion last quarter were ultimately closed out, aside from 2 that still remain in the fund's portfolio today, The Real and Crescent Energy Company. In a major portfolio overhaul, Scion Asset Management closed out several positions. The most significant closure involved the short positions against SPY and QQQ through put contracts, which, as noted earlier, were likely closed with little to no gain. This strategic move appears timely, as both indices have risen over 5% post-Q3. Noteworthy exits also included Expedia Group and Charter Communications, previously the 3rd and 4th largest holdings. Burry's CHTR shares, acquired between $320 and $368, were sold in a range up to $455, likely securing a profit. The XP position, initiated in Q2 between $89 and $112, faced a downturn post-Q2 earnings, with a potential sale price peaking at $122 before dropping. A major hack at MGM Resorts last quarter prompted Scion's closure of this once major holding. The long-held GEO Group, a private prisons company, was also completely divested, marking the end of its significant presence in the portfolio. A brief holding in CVS Health Corporation, CVS, ended with a probable gain of about 15%. Overall, the quarter concluded with 20 positions from the previous period being liquidated. Dr. Burry's portfolio is known for its high quarter-over-quarter turnover, yet this period exceeded typical levels. His strategic acumen was evident in numerous timely stock picks, aside from the less successful SPY and QQQ shorts. This quarter, his portfolio showcases a diverse array of investments spanning 5 to 6 different sectors. A key focal point is his short position in the semiconductor industry, a move not just financially motivated but also intertwined with complex geopolitical dynamics, especially between the US and China. This strategy becomes particularly intriguing as most SOXX holdings have surged by at least 50% year-to-date. Moreover, his active trading of Chinese tech stocks JD and Baba underscores a keen interest in leveraging global economic and political developments. To stay up to date on all of Michael Burry's latest moves and track the holdings of other hedge fund managers, visit quiverquant.com.